Alrighty, guys, let's talk about the 5-period moving average. So I have in front of you the weekly chart of the S&P 500 ETF, the SPY. And our blue line here is the 5-week moving average. Now, price never gets very far from this moving average. It is actually one of the most tagged moving averages. As you see here, with last week's closing price, we are about the furthest extended from the moving average that we've been in quite some time. It looks like back here in the August, the end of the August pullback from 2024, we were a little bit further from it, but as you see, we snapped back to the moving average. So that's my point here. So being that we're so far away from the moving average, this week we are likely to see a bounce and a move back towards this 5-period moving average. So that is what I will be looking for this week. Let's bring up my lines and we'll go over some support and resistance real quick. Well, it's actually, I placed these on the 4-hour time frame, so it's harder to see on the weekly. But a couple things to point out. We do have what looks to be a double top formation with the neckline almost being broken last week. Well, the neckline did get broken, and then we just closed back above it. So it's not yet confirmed. We have to close below the neckline for this to be a double top. But some of the levels we're looking for this week, you notice our lower weekly expected move is here around 559, and then the upper weekly expected move is up here at 591. So I actually believe it's more like 560 is the lower weekly expected move, which I'm just 2 cents shy of. So let's move. Okay, now we're in the 560s. So it is quite a big weekly range. Last week we did tag the previous all-time high that we hit back in July. So this is a very strong area of support, I would say, for the SPY to find buyers and then push it back up. Let's go down into the daily time frame. Let's just hide the moving average for a minute. So yeah, last week we came in and touched the previous all-time high, tested it as support, and now we bounced off of it. So I will say I'm on the side of we're going to get a bounce this week, but we can definitely go over some levels if the SPY is going to fall. We do have a gap here back from September 18th where we gapped up pretty big, and so I believe this will be an area to look for if the SPY is going to fall any further. Looks like we closed right about here. The top of the gap is right there. So if the SPY continues falling, it looks like, yeah, the lower weekly expected move is almost perfectly in that same area. But I believe this gap will be filled if we continue lower. I would say if we're going to get a bounce this week, look for the highs from Friday's candle to be taken out. And if that happens, then I'd look for the Thursday's candles highs to get taken out. And then as long as we hold above support here, 575, looks like the next level of resistance is up here at 585. Just to get a better idea, let's go intraday here on the 4-hour. You'll see we did get somewhat of a bullish engulfing candle. So if the buyers continue to push price higher, I'm looking for price to hold this 575 support level and then come up towards 585. Let's also go a little bit further. Let's drop down into the 15-minute time frame. Then let's see what our 200 period moving average is doing. So price is still below the 200 period moving average. So that does still mean that the bears are in control. For us to be a little more bullish or any sort of bullish in this market, we must get above the 200 period moving average here. And the bulls hold above it. What we're looking for this week, or at least what we're looking for in this upcoming bounce, we want the moving average to start moving sideways, bulls to push price above the moving average, and then we head up towards 585. Then hopefully we can remain above 585 long enough to head up towards the upper weekly expected move around 591, all while turning over our 200 period moving average, and then it starts supporting the buyers, and then price can continue moving higher. Not overly bullish on the market at the current moment, being that we did make a lower low on the higher time frame charts. Unless we can make a new all-time high, we may be just looking for a lower high to form before the bears step back in. But let's go over. So that was the bullish scenario. If price gets above the 200 period moving average, we head up towards 585 and then 591. But if price remains below this, let's say we gap down tomorrow below the support here, 575. So if we head down lower and fall below the next support level of 572, then it looks like price would head down towards 567 will be the next support. And then if it fell through that, I'd look for the lows from Friday, maybe hold as support. But if the bearish price action, is pushing price lower, it's most likely headed towards this gap and the lower expected move for the week. Now, let's go over to the triple Qs and see what the Qs are doing. We'll go out to the weekly time frame. Let's bring up the 5-period moving average. And let's see what price is doing here on the triple Qs. So, just like the SPY, we did fall pretty far from our 5-period moving average here on the weekly time frame. Price does not get very far from this moving average before it comes back to it. So, even if we fall lower this week, I would say that even more validates the bulls stepping up and pushing price back towards this moving average, and we get a bounce. Let's just look at our support and resistance levels really quick. So we have broken below the previous all-time high right here, which is pretty bearish. It looks like, we fell right through it last week, and we fall into the lows back from October, the end of October. If this area can hold as support, then we should be headed back up through this 494 up to 499, and then possibly up towards our upper weekly expected move at 507. If the bears continue pushing price lower, though, we do have the lower weekly expected move down here at 475. I'd be looking for this 484 level to get taken out, and then that'd probably mean next support is down here at 477, but that's close enough to the lower weekly expected move to just say we'd probably be headed down towards that. So let's go over a 4-hour time frame now. Let's bring up the 200 period. all of my charts here. So on the 4-hour time frame, we did seem to get this bullish engulfing candle at the end of the day on Friday as well. So I'd be looking for price to continue pushing up towards 494. And if price is able to get above that, I'd look for it to find resistance and then possibly break above this descending trend line for a move higher to 499. So if bullish price action continues, look for it to get above 494, break this trend line, which actually I would say would be pretty strong if we are able to break that trend line. Then we can head up towards our upper weekly expected move and then try for these highs here at about 513. So that's the bullish scenario. Now, if say the bears step in and then push price below our 484 support level, then I'd look for price to head down towards 475. Let's just look at the 15-minute time frame and see what our 200 period moving average is doing. So the bulls were not able to get above our 200 period moving average, so the bears are still in control. So if it so happens that the bears push price lower Monday morning and we head back down towards 484, I'd be looking for the buyers to try to hold this level. And if that's possible, then we can head back up towards 494. If that level breaks, then head up towards 499. Be bullish for the market to break the descending trend line here. But let's say the bears break below the 484 level. If bulls can't hold this level, we'd fall below here and then head down towards 475 probably. I would first look for the low from Friday to possibly hold as some support. That could be a scenario, and then price heads back up. But okay, those are both the bullish and bearish scenarios for the triple Qs going into next week. I think I'm just going to make a quick video here for you guys. We'll not go too much more in depth. One more thing I wanted to look at, though, is the RSI. So we have been building out quite the divergence as price has continued to make lower lows. The RSI is still forming some higher lows. So I would say this means the bulls are building momentum before they push higher. No bearish divergences to speak of yet, at least here on the triple Qs. So really what I want to see is our momentum waves come back up above the zero line, and maybe we get like another just small wave above the zero line before the bears start pushing price lower again. Let's see what the SPY is at. So yeah, same, building out those divergences of we've made lower lows. We've just been making sort of higher lows here. So that's building momentum for the buyers to eventually make a push higher. Same scenario on our momentum waves. I'd like to see these curl up. We break that zero line and then create another wave in the upper direction before a possible another leg lower. Alrighty guys, that's going to be it for this video. Thanks for watching High Quality Trades. Don't forget to like and subscribe. And I'll see you guys in the next video. Peace.